Okay, I'm going to take you through my March 2025 update on latest savings account news and, of course, the best places to put your money, which accounts are paying the top rates of interest. First of all, let's just talk through what's been going on in the last month. And the big thing was the announcement by the Bank of England back in the first week or second week of February that they were cutting the base rate from 4.75% to 4.5%. Now, as is pretty much always the case here, when the base rate goes up, the savers, the banks and all that, they're quite slow at passing on that rate. Some of them are quite good, but generally it takes a while, if at all, for them to give us these increases. But then when they cut it, they're pretty fast. And we have seen over the last 3 weeks, so many rate cuts across pretty much all types of account, falling down, 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 down. So a month ago, you could get 5.12% on an easy access ISA as it happened, and 4.7% on a 1-year fix. Now, the same sort of equivalent accounts, it's 4.76% for the easy access and 4.58% for the 1-year fix. And again, these have been falling all across the piece. So they're the top rates, and we'll go into detail about all the other options for you right now, since you're a new customer moving your money across. But of course, you may well have less than that. Just because the top rate's paying that, you may find that your rate is way, way lower than that. And we had a number, as we talked about in previous months, where rates were tracking the base rates. They fell straight away. As soon as it was going to happen, they cut down, but also had their own additional cuts that they were doing as well to that tracker rate, or other things falling around. So it is obviously a really, really good moment for you, an important moment for you to have a look at what you are earning and seeing if by moving your money, you are going to get a better rate out there. Very quickly, in terms of the rest of the year, what might happen with the base rate and therefore what might happen with savings rates is obviously always something that can change. And you say something now and something happens and the predictions and the expectations completely dramatically change again. But at the moment, they don't expect it to be another base rate cut at the next meeting, which is on April, so on the 20th of March. So one in just a few weeks' time, likely that it will stay where it is. So the variable rate ones, probably, they could change. Banks can do what they want with them, obviously, but generally we might see things roughly where they are. But the one after that on the 8th of May, that is when they're looking like most likely now there will be another 0.25 percentage point increase, bring us down to 4.25%. And then another one before the year is out, bring us down to 4%. That's what the kind of the broad thinking is right now. But there are people out there who think differently. There are predictions that it could drop to 3.75 by the end of the year, or even 3.5%. Now, if some, if not all of those come true, and we do drop down from that current rate of 4.5%, it means there will be more drops to other savings accounts out there. And not just as we go through those, the variable easy access ones, which are much more sort of closely tied into the base rates, or the fixes, which are, again, based on even longer predictions. So if you've got a 5-year fix, that's based on where they think rates could be in 5 years' time, all of that. Not only will those things all start dropping down, but also a lot of those promotional rates where they're trying to get your customer like those regular savers. So I certainly think, and we can talk about the best ones in a moment, really, really think here, if there is a really good rate out there right now, ideally a fixed rate account, if you can afford to put your money away for any sort of period of time, it is a good time to be doing it. I know I've said this before, because with these rates have been coming now over the last sort of 6 months or so since the first one we had, and great expectations are more, definitely worth thinking about it, cutting those rates fixing if you can, locking in those rates, because by the time that comes around, 6 months time, a year's time, they could be way, way, way lower. Again, there's always with that caveat that if something happens in the world, like say inflation, gone the way back up again, isn't it? If that was suddenly go out of control rather than where they think go up to sort of like, the high 3s and then back down again, that could obviously mean they'd actually flip things around. You could obviously have rate increases or periods where it doesn't drop at all, but that's currently where we're thinking right now. Now, I can't go through all the different rate cuts that have happened as a result of this, because there have been so many. I will, as I said, later on just tell you about the top paying accounts right now. But there are 2 cuts in particular I do want to bring your attention to. The first one of these is premium bonds. The prize rate has been cut again. It's the 4th cut we've had in 12 months. From the April draw, the prize rate will fall from 4% to 3.8%. So at the time of recording this, the March draw winnings, if you've won, if you've been lucky enough to win, will be announced just really pretty much when you're listening to this, if not the next day or two. Then you've got a month until this new one comes along, this lower rate. So what does that mean? 3.8 versus 4%. Well, you've got to remember with premium bonds that the prizes are never guaranteed. Does 3.8% does not mean you're going to get a 3.8% return as you would if you had it in a savings account. So the likelihood is for most people it would be less than that. So if you are going to get less than 3.8%, you then compare that to the other options out there. And as we said, you can get 4.76% on an easy access account right now as well. So there's almost potentially a whole 1% difference between premium bonds and the best easy access options out there. Again, that might not be perfect. You might not be able to get that top rate on easy access, but even if you drop down a few levels, it's still a very significant difference between what premium bonds are offering from April and what the easy access accounts will offer. And again, if we see more cuts coming to the base rate, then you'd imagine this would drop again to even lower rates. And yes, those easy access ones would fall as well. But broadly speaking, it's not looking like a good time for premium bonds. It's basically what I'm saying. However, I'm not going to go into detail again. We did cover just a few weeks ago. Amelia took you through exactly those basics of premium bonds. And earlier this year or late last year, I went through 3 of my friends had the full 50K in premium bonds and shared what their different winnings were, because it is a very massive variety. It's all down to luck. There's no guarantees that you'll get better or worse or in the middle. It can be really a huge range of things. Check out those episodes if you want to sort of refresh yourself on that. But I would be saying, really, most people look to move your money out to a proper account unless you are someone who is likely to be paying a lot of tax on your savings outside. If you're an additional rate taxpayer, premium bonds are certainly worth a look there, and even a higher rate taxpayer potentially on some of it. But again, think about how much you actually need in savings. Now, if you are someone who is going to ditch premium bonds, now is the time to do it. So as I say, we've just had the March announcement at the start of the month. Take the money out now, put it into a separate savings account. If you are listening to this towards the end of March, then maybe leave it in for that extra week or so, because then at least you'll be able to take advantage of that draw that does take place at the start of the month. And if you're in the middle, it's a bit touch and go there, but certainly get it out now if you're going to move it. If you don't, leave it into the end of the month. At least get that April prize draw, which will take place on like the first or second working day, and then move it out elsewhere, again, by looking at what was available elsewhere. The other quick cut that I want to tell you about as well relates to Barclays. Now, last month I told you about them finally. They announced it a while ago, but finally bringing down the rates on the Rainy Day Saver. Now, this has for a long time now been paying 5.12% AER. Now it pays 4.86 AER on up balances of up to £5,000. So that new rate, 4.86, sounds quite good compared to what you can get elsewhere. But you've got to remember, it has that £5 monthly fee if you are getting it via the Blue Rewards add-on to a current account. If you've got the Barclays Premier account, then you don't pay the fee at all. You are getting 4.86%. Anyway, that's just happened. And then like a week later, 2 weeks later, they announced that from the 6th of May, it's going to drop down again, 4.61%. So this is a good example where I mentioned before about these sort of these rates which are out there trying to attract you in to get extra perks or particular accounts. They're also falling. Here is one. I would say that is not worth it. Even at 4.61%, it's not worth paying that £5 a month to get it, unless you absolutely want to pay £5 a month for the other benefits, such as free Apple TV Plus. But again, I think anyone who pays 60 quid a year for Apple TV is probably wasting money, because you can just get it for free for a number of months, or maybe just have it for 1 or 2 months at full price, then cancel it and then get it in later in the year. You'll be saving yourself cash there. But that's the other cut to let you know about. What else to tell you about? I won't go into a huge amount of detail here, because obviously did cover it just in the last few weeks in a separate episode, but about cash ISA reform. There's been more speculation since I spoke about this, what changes the Labour government might be looking to do to cash ISAs, if not ISAs overall. The one that I was speaking about before was maybe getting rid of cash ISAs completely. That was one of the things that they were talking about. Then since then, the other kind of rumour that seems to be sort of sticking around a little bit is that the ISA allowance could drop down to £4,000 from the current £20,000, whether just for cash ISAs or for all ISAs. Again, we don't know if any of this is actually going to happen, how much of it is true or not. What we do know is that the spring statement is taking place on the 26th of March, and potentially, Rachel Reeves, the Chancellor, might announce some of the changes there. But I will reiterate what I said last time. It's going to be almost impossible for this to be in retrospect. So if you've got money in ISAs from previous years or from this year, that is going to be protected. They're not going to be changing that. It'd be so difficult for them to do that. If they were going to make changes going forward, I think it'd be very difficult. Still think it'd be incredibly difficult to make those changes to kick in from April the 6th from the next financial year. maybe not impossible, but I think incredibly difficult. So I still think anything would be a year later. And if they do make these changes, then no one's saying to scrap ISAs completely. So you could still be able to put ISAs in cash equivalent accounts within a stocks and shares ISA. Again, as soon as we know anything is announced on the 26th of March, if anything is said at all, we will do an update. I'll do an article straight away on the website, followed by a video, followed by a podcast episode the following week. So you'll know exactly what is happening. But the main thing to do right now, and I'll reiterate what I said last time, is not to panic. So I've seen people talking about, should I take all my money out of ISAs if they're going to scrap them? No, do not do that. If your money is in ISAs, keep it in ISAs, because that protection, as I say, will hopefully carry on year after year, year after year, year after year, even if they change it going forward. So don't do that. But what I would also encourage you to do, though, is if you haven't used your ISA allowance, that is up to £20,000 you can put into an ISA in the financial year, which ran from April the 6th, 2024 until April the 5th of this year, 2025, up to £20,000 can be put into one or a combination of ISAs, whether that's lots of different cash ISAs or a mix of cash and stocks and shares or a mix of stocks and shares ISAs, or however you want to do it. And the lifetime ISAs in there as well, although there is a £4,000 cap on the lifetime ISAs within the overall £20,000. Just use your allowance this year. Now, it's quite useful, the fact that so many of the top paying easy access accounts right now are ISAs anyway. You could put your money in there, protects it, you're getting a good rate, and then if you decide you want to move it into a fix or into stocks and shares ISAs later on, you can. If you want to remove it, you can. But I guess it means that you've got money in that ISA protection if there are changes in a month's time, which would be to your detriment. So certainly any money you've got right now, if it is in easy access, I would be looking at moving it into an easy access cash ISA, just to kind of use up, secure that allowance in that kind of short term. Obviously, if you want to put it in a fix or stocks and shares ISAs, you absolutely can do that as well. So that is it on the savings news. Let's get into the best paying accounts right now. Right, before we get on to the top rates for March 2025, I do want to talk about a special offer that is running until the 14th of March this year. This is via the savings marketplace Raisin. Basically, it's a place where you can go, put your money in, and then there are a number of providers listed, and you can put your money into one and move it to the other if you want within that kind of ecosystem, rather than open up new accounts at lots of different places. Now, sometimes there are some very high rates there, sometimes they're not as good as elsewhere. But right now, it is a good time to give Raisin a try if you haven't done it before, because there is a £100 bonus available for newbies to Raisin who save £10,000, so a lot of money, but £10,000 for 6 months. You've got to go via the link over on becleverwithyourcash.com and enter in a promo code, which is listed over there as well. And then open up the account. And I say must be any type of account, doesn't matter which type of account it is, but the money must be in there for at least 6 months. So if you went for an easy access or a notice account, for example, then obviously don't touch the money before then. If you went for a 6-month fix, which is probably the perfect one to go for, in my opinion, then you'll find that 6 months is up and the money matures, and then you get your bonus as well. If you go for a longer fix, well, obviously the money is tied away for longer than 6 months. I will take you through the best options as we go through all the top accounts. But if you do want to find that link and that code, head over to becleverwithyourcash.com/savings, which is also the place to go to get all the updates and all the rates I'm going to take you through right now. I say this every single month when I do these updates. Things will change between me recording this and you listening to this. It just happens. It's as accurate as it possibly can be right now. But our best buy tables over on the website are updated at least twice a day by myself and the team to ensure when you go there, you will not be missing out on the best rates out there at all for your accounts. We've also got a separate one, becleverwithyourcash.com/ISAs, which will take you through the best cash ISAs, but also some stocks and shares ISAs on there as well now, including some special offers. So check out those 2 pages to get the best deals. Now, what I'm going to do this month with this update is, because I've stress that importance of using the cash ISA allowance, I am going to break them down, give you cash ISAs alongside the non-cash ISA equivalents of those accounts, rather than just doing all the cash ISAs at the end. But let's start off with the best easy access account. So my top pick here, the one which is going to give you the best possible rate, is still that Santander Edge Saver. Now, this one is linked to the Santander Edge current account. So you have to open up that account. It does come with a monthly fee, but as long as you don't set up any direct debits on that account, you won't get charged it. So for some people, that's the best thing to do. Although if you do set up direct debits on there, you can get cash back on your bill. So you might want to have a look at that, and that cash back on bill should cover the fee anyway. Anyway, 6% variable, including a 1.5% bonus for 12 months on balances of up to £4,000. So this is the only place on a proper easy access account where you will be getting pretty much above 5% now. Everywhere else has dropped down. In terms of pure easy access, where you can get more money, more than just that £4,000 without a fee, without kind of having a current account, just open up an account, then the top picks here are all cash ISAs, as has been the case for the last a good while now. That kind of battle at the top from these providers, making sure that they are trying to get your ISA money by giving you rates above 5%. They've pretty much all fallen down now. There is one provider still offering you more than 5%, but it's a cheeky 5%. This is CHIP. They give you 5.25% variable, but only for 3 months. After 3 months, that drops down to 4.32%. So, I don't know. If you haven't had CHIP before, maybe give it a go. Forget that 3 months of a bonus. But if you're not putting a huge amount of money in there, then that little bonus isn't going to be worth much either. The next drop down from that is Moneybox, 4.77%. This is limited, only 3 withdrawals a year, and that does include a bonus for the year. So after 12 months, that absolutely will drop down. And then we have Trading 212, who were for a long time right at the top of the table with well above 5%. They're offering 4.76% for newbies, for new Trading 2 customers. If you already have an account with them, you will be getting a lower rate. I think it's 4.5%. But again, talking about new people moving your money, then they're the top ones for you, and they are all in cash ISAs. The non-cash ISAs are a little bit below that, but not too much below. So we have got Monument with 4.75%. That's a very, very, very high minimum deposit of £25,000. Then we've got a limited access account, only 3 withdrawals a year, with the Principality Building Society at 4.7%. And then we have Sidekick Money, which is a newer app-based savings and investments platform, 4.59%. So you can see big drops down from where we were just a few months ago. Then I've got a couple more kind of easy access to tell you about. Notice accounts, basically you say, I want to get my money in X amount of time. Now, sometimes these offer rates which are higher than an easy access, or at least around about there. The moment, most of them are well below easy access. So for most people, an easy access account is a better option for you. There is one via Raisin. Told you about that special offer just now. 1 month notice with Investec via Raisin's 4.76%. Now, again, it is only a 1 month notice. Just if you are going to take advantage of this for that special offer, keep the money in there for 6 months. At a better rate, there was a 3-month notice account from Vida, 4.95% on a 90-day notice account. And there's still, for those of you who find those restrictions a little bit too much on those accounts we mentioned just now, you can still get 4.6% on your uninvested cash within the Trading 212, either stocks and shares ISA or the general investing account, which means if you're worried about the minimum deposit with Monument or the maximum cap on some of the others, it might be worth a look. But I'm just telling you about it for completion. Remember, there are more accounts listed over at becleverwithyourcash.com/savings. I'm just telling you about the top ones right now. Okay, let's talk fixed rate savings right now. And first of all, I'm going to talk about the ones that link into that Raisin offer I mentioned just now, that £100 bonus if you go via our link and use the promo code listed over at becleverwithyourcash.com/savings. Now, the best one here, I think, to go for is a 6-month fix, because that's the minimum you need for that offer. But then you could take your money out and put it elsewhere and try and get a better rate if you can. This one is 4.42% with FCMB, again, via Raisin. That £100 bonus added on to £10,000 works at 6.42% equivalent rate. Obviously, if you put more than 10k in, it will reduce the equivalent rate that you get. If you want to put it away for 12 months, you can do that. Again, the same bank, FCMB via Raisin, currently offering 4.45%. If you put 10 grand in there for 6 months, that will give you the equivalent of 5.5% return. Now, there are longer fixes if you want to go for those as well, but that obviously just reduce the actual value of that bonus. So really then, if it does come down, you want to be comparing it against other savings accounts, other fixed rate accounts out there, exactly what rate you're going to get. But these two, particularly, they're going to make you head and shoulders above what you're going to get elsewhere if you are new to Raisin and have 10k to save. Let's have a look at the other accounts as well right now. I'm going to lead with the fixed rate ISAs because, again, I think it's well worth going for this and using your ISA allowance this month if you have money to put aside and you haven't used your ISA allowance at all. Again, bear in mind, though, obviously, if you are locking it away within an ISA, you can take the money out, but there will be a penalty in interest. So the top paying 1 year fixed rate ISA right now is Vida Savings via Hargreaves Lansdown at 4.55%. Then the 2-year fix is Close Brothers, 4.41%. Close Brothers are also the best 3-year fix at 4.43%. 4-year fixed ISA is with UBL, and that is at 4.05%. And 5 years, it's Hodge Bank, 4.45%. Again, there are more options all listed over on our website. In terms of non-ISAs, you will find these rates are better on the whole than the ISA ones, but again, you don't get that tax-free allowance. And you've got to remember, with any kind of fixed rate account, when is the interest paid? Do it take you over your personal savings allowance? Anyway, the top 6-month fix right now is Hampshire Trust Bank, 4.51%. Top 9-month fix is Shawbrook Bank, 4.5%. 12 months, we've got Close Brothers, 4.58%. And then 18-month Oxbury, 4.61%. The best 2-year fix is Oxbury again, 4.53%. And the best 3-year fix is Close Brothers, 4.63%. Then we have 4-year and 5-year fixes from JN Bank, 4.51% for the 4-year, 4.55% for the 5-year. They are the top fixed accounts. Now, I'll quickly talk about lifetime ISAs. Again, there are more of these listed over on the site, but the best cash lifetime ISA is currently Moneybox, paying 4.6%. There are others very close to that as well. So again, it depends if you're a new customer, how long the bonus is for, what you're going for. Remember, a cash lifetime ISA is the best option if you are looking to buy your first home. If you are looking for one for your retirement, well, first of all, think about pensions. But if not, you might want to be looking at a stocks and shares lifetime ISA. And we do have lifetime ISAs, and all stocks and shares ISAs are listed over on the Best Buy tables as well for stocks and shares, not just cash. And then finally, I want to talk about regular savers, because these are the ones which I really think are likely to disappear because they're the top paying ones. And I can't believe that they're going to stay at these rates if we let alone the cuts we've already seen, if we see more cuts as the year goes on. The top paying one, I was telling you about this for completion, is a 6-month fix with Principality Building Society. You get 8% and it's fixed, which is great, but it's not for very long and for small amounts. So most people, it's probably not the best option for you. Better, I think, is the First Direct Regular Saver. This one pays 7%, which is fixed for the year. So you absolutely will get 7% for the year. The maximum you can save here is £300 a month. It does require you to have a current account with First Direct. But don't forget, there is a switch offer going on right now with them, which will mean you get the money, switch your money if you're new to First Direct, and you can open up and lock this rating for the year. There are a couple of variable rate regular savers, but again, they're variable, so they could change. So Cooperative Bank has a 7% variable one. Nationwide has 6.5% variable one. Again, they are linked to current accounts. I would not be going out of my way to open up current accounts to get those regular savers because the rates are variable. Instead, after that First Direct one, if you want more than one regular saver, I'd be looking at Club Lloyd's, because that one is fixed again. That is 6.25%. So yes, it's a little bit lower, but you can pay in more every month. You can pay in £400. So ultimately, you're going to be getting, if you put the full amount every month, a much larger return on that, thanks to that fixed rate, which won't change. Remember, head to becleverwithyourcash.com/savings for all the updates on these accounts, plus becleverwithyourcash.com/ISAs for the top paying cash and stocks and shares ISAs as well. My name's Andy Webb. Thank you so much for watching. Check out these videos here for more ways to make the most of your money.